Meeting an angel investor isn't just about pitching your business, it's about starting a potential long-term relationship. Today we're going to walk through the 7 critical steps that will prepare you for these career-defining conversations. By the end of this video, you'll understand exactly what investors are looking for and how to present yourself as a confident, prepared founder. Before we dive into the steps, let's understand how angel investors think. You can take it from me as someone who has dealt with multiple angel investors and been one myself. These aren't just wealthy individuals looking to multiply their money. They're experienced business people who want to be part of another success story. They're investing their personal money, which means their decision-making process is often more emotional and intuitive than institutional investors. Think of angel investors like World Cup winners. They've reached the finals before, and now they're looking for promising players to follow the same path. They're not just providing equipment or capital, they're offering their expertise, network, and experience. So, let's take a look at my tried and tested steps to prepare yourself for that first meeting. Step 1, research. Your preparation begins long before you meet any investor. Start by thoroughly researching potential angels in your industry. Look for investors who have experience in your sector and have solved similar problems to what you're addressing. This isn't just about finding money, it's about finding the right partner for your journey. Study their previous investments, read their publications, listen to their podcast appearances. Understanding their investment thesis helps you position your pitch effectively. If an investor has previously invested in direct-to-consumer brands, they'll understand the metrics and the challenges specific to that business model. Step 2, know your narrative. Your story needs to be more than just compelling. It needs to be memorable. Create a narrative that explains not just what you're doing, but why you're the right person to do it. This isn't about creating fiction, it's about organizing the truth in a way that resonates. Think of your pitch like a movie trailer. It needs to hook the attention immediately, showcase the most compelling elements of your story, and leave the viewer wanting to know more. Practice telling your story in different time frames, 30 seconds, 2 minutes, 5 minutes. Different situations require different levels of detail. Next up, master the numbers. Angels invest with their hearts, but they validate with their heads. You need to know your numbers like the back of your hands. This means understanding not just the current metrics, but how they'll evolve as you scale. Be prepared to explain your unit economics, customer acquisition costs, lifetime value, and growth projections. Create what I call a metrics narrative. The story your numbers tell about your business. If your customer acquisition cost is high but declining, explain why. If your churn is above industry standard but improving, show the trend and explain your plan to optimize it. This is key to avoid stumbling over your numbers when they come under scrutiny. Don't forget, they're not looking for millions in the bank, just a promising trajectory with a great message behind it. Before you walk into any investor meeting, gather compelling evidence that validates your business model. That's step 4. This could be customer testimonials, letters of intent from potential clients, pilot program results, or early traction metrics. Think of these A-listers in your soon-to-be star-studded movie trailer. Remember, investors are looking for evidence that de-risks their potential investment. Every piece of validation you can provide makes their decision easier. Document everything meticulously and be prepared to share specific examples and data points that support your claims. The next thing you should do is know exactly what you're asking for and why. This isn't just about the amount of money, it's about what that money will help you achieve. Create a clear breakdown of how you'll use those funds and what milestones they'll help you reach. Your ask should be strategic and well-reasoned. If you're raising $500,000, be prepared to explain why that's the right amount. Not too little to achieve your goals and not more than you need for your current stage. Show your investors that you're thoughtful about capital efficiency. This is key. The next step comes inside the meeting. The actual investor meeting is where all your preparation comes together. Start by building rapport. Remember, angels are investing in you as much as your business. Be authentic while maintaining professionalism. Show enthusiasm tempered with realism. In fact, it's well known in business that investors invest in people, not businesses. Control the conversation flow while remaining flexible. Have a clear structure in mind, but be ready to dive deeper into areas that interest the investor. Listen carefully to their questions. They often reveal what the investor cares about most. Pay attention to non-verbal cues. If an investor leans forward during certain topics, that's a signal to expand on those areas. If they seem skeptical about certain plans, be ready to provide additional validation. And finally, I call this one the follow-up formula. Remember, the meeting is just the beginning. Your follow-up can often make the difference. Address any questions that came up during the meeting that you couldn't fully answer on the spot. This means remembering what happened in the meeting. Take notes if needed, and make sure to follow up with the investor on any information they requested. And most importantly, thank them for their time. Furthermore, create a systematic follow-up process that keeps investors informed without overwhelming them. Regular updates about significant developments show that you're executing on your plan and respect their time. Throughout this process, maintain professional but personal communication. Angels often make decisions based on their gut feeling about a founder. Every interaction is an opportunity to build trust and demonstrate your capabilities. Be transparent about challenges as well as successes. If something isn't going to plan, communicate it proactively. This builds credibility and shows that you can handle difficulties professionally. Remember that angel investments often lead to long-term relationships. Think beyond the immediate funding round. How can this investor add value beyond capital? Are they someone you'd want on your board? Would their experience be valuable in future challenges? Build relationships with a long-term perspective. Even if an angel doesn't invest immediately, maintaining a professional connection can lead to opportunities down the road. So in conclusion, meeting with angel investors is a crucial step in your entrepreneurial journey. By following these 7 steps, you're not just preparing for a meeting, you're laying the groundwork for potential long-term partnerships that can transform your business. Remember, every successful founder started exactly where you are now. The difference between success and failure often comes down to preparation, authenticity, and the ability to build meaningful relationships with your investors who believe in your vision. Share your experiences with angel investors in the comments below. What challenges have you faced in preparing for these crucial conversations? Please remember to like this video if you found it useful and subscribe to my channel for more content. Thanks for watching.